Right, we'll move to the 15-minute chart today. Uh, we are looking at the market having taken out really level 3, has taken out level 1. We just related to the importance and relevance of these two. That is the same level 1 which we have now taken out. All right, so we're looking at a very strong head here. Does that mean that the market is just going to be doing shoulder and then falling back, doing shoulders maybe to 127.50 and then falling back? From what we're seeing, because of the current fundamental release, we expect at least to be doing a double head or a higher head. So, because of the UK elections, the market is very optimistic regarding sterling moving into the future. We're going to get a double head. We believe a double head takes us to 129.50. You can see 128 here. Right? The next level above this is 129.50. If we see spectacular, so we can take this back to the inverted heads and shoulders. We see here head, inverted shoulders to the left, inverted, or what was expected to be inverted shoulders to the right. I can, of course, label this a head and shoulders. I'm doing a higher head because of the current fundamental impact in the market. Higher head takes me to 129.50. The 4 hours again, I'm seeing 129, so a higher head will take me to 129.50. Over here, 129.50 is just midway inside of this ending diagonal. A higher head can even take me much higher, or can take the market much higher than 129.50. All right, let's take it now to actual trade management. So right now we're seeing a trigger on the 30 minutes. We're seeing a trigger on the 15 minutes. This has already done a 1 and a 2. It's doing a breakout into a 3. This is really the best risk reward that we can get in the market. There is a basic fundamental driver. We're all seeing heads and shoulders. We have, of course, labeled one complete shoulder at that point. You would expect the market to move all the way to the neckline, fall back again, and then break higher. But in reality, we are seeing just one complete shoulder level, or you can call it a double local head level. We're just seeing one complete shoulder level. We expect the market to break higher immediately to 128.50. 128.50 is showing right there. Before we have any retractions to support 127.50. Again, if we catch up with that, or the market will begin to discount election results even before the election. This is what's going on right now, before Thursday. And as already detailed, we are going to be seeing 129. We're going to be seeing a higher head, 129.50, over here even showing as high as 130. All right, let's take it live then. Check momentum picture first. So continuous positive momentum on the 30 minutes, 45, with the trigger at that point. Buy on the 1 hour, but we're now above the 200-point moving average, and if we are feeding positive momentum into the 200-point moving average, into the price action above the 200-point moving average on the 1 hour, then of course there's very likely to be continuation. I believe we don't get any more positive momentum pictures, not on the 2 hours, not on the 4 hours, definitely not on the day. Let's add the labels of the new motive. This is where you had just a bit of negative momentum, so you have a 1 and a 2. Bear with us a second. Right, so actually we're concerned with 1 and 2, and more important is this leg 1 and leg 2, because it shows an indentation of an internal level 2. So this is actually what I wanted to make or do. It's a fraction of something bigger, but we are only concerned with the fact that we're breaking out into a 3. So we have an indentation here that's something like a 1 and a 2 at that point, then another 3 and a 4 and a 5. I have 5 swings into internal level 1. Internal level 2 is registered because you have a bounce above 0 and a second market above overbought. So we are now doing a 3, and that 3 should be sharp and can take us, I believe, should take us immediately to the next neckline. So this is the importance of the coming trade, or of the coming move, and the importance of this structure. So I've already done leg 1 and 2. I believe the next leg will be very swift, and we're looking at 127.80, resistance 5 today on the 15 minutes. We're also looking at the relevant resistances on the hourly time frames. I believe we are going to get this move going into the UK elections, and even before, much before, a year earlier than the UK elections. Will be also could be aggravated during LFP day. Why is this necessary? Because we have to have a wave 3 that will support this neckline. We're seeing double hits, so we must break the neckline. We're going to 128. We're also going probably to 128.40s in order to be able to support the neckline, which is over here, of course, 128.50. Right, let's take it to targets. So the most relevant is this week. I believe we're going to see it quite easily. Is resistance 5, 1.2860. I'm looking at that level, 128.60. Definitely, because of the coming election, and this is whereby you don't even get a double head, you actually get shoulder levels. Remember these. Remember this structure, assuming you're getting a series of inverted head and shoulders with the neckline here. So you rejected the neckline at around 128.50. and then fall back to do another shoulder level. So this is in case we don't even have a bullish market. Assuming that we're getting more strength into sterling, because we are looking, of course, at a bullish fundamental for sterling, then it's not only going to be resistance 5, it's probably going to be higher. We are probably going to get 129. It's not really showing here this week, but I believe we get it on the daily. We're going to get 129 before we fall back, and we either then can consider that we're having a higher head or and a top out, or is this still going to be continuation for an even higher level? So let's take it to the daily resistance projections. This is the same daily first we've seen on our charts, and you get 129.50 resistance too. So I believe that's where we are going initially after the UK elections or during the UK elections. 129.50. At that point, we have a shorter head than the higher head. We have, of course, a head at 131.37. So the least we get is really 129.50. I believe higher, because all the way to 129.50 means is just a bit of a higher shoulder than all this sequence of shoulders. So there's a double shoulder here. So a bit of this higher shoulder is 129.50. So we could consider to target 129.50 going into the end of the week. Right now, of course, we are 126.80s. Okay, so we've had a 1 and a 2, we're doing now a 3. The best action, I believe, would be, or the best strategy would be to buy market, not wait for any retraction because of what we're looking at. And remember that the technicals must serve the fundamentals, must really run in line with what you expect with the fundamentals. So if we are half size long, for instance, we'd add at 126.80. If we are not long in the first place, we would consider to buy 126.82. This is the current market level. Our hedge is just a protective hedge at 126.20 or 126, just 80 points. It's a hedge and not a stop. We don't believe the market. This is one of the primary trades that we want to be invested in this week. As a swing trend trade, or as a swing trending trade. I hope I'm pronouncing that right. Okay, so the entry is market 126.82. We have a protective edge at support 1 today, 126.20. You can take it a bit lower if you wish to 126. We're going to target 129.50. Let's take a look at that 129.50 on high degree frames. We'll start with the monthly. Well, remember this monthly chart. All right, so we know that we expect that we think we know we're doing a butterfly pattern. And that the butterfly pattern has already done an X, A, B, C, D. D is finished, the market is moving in this ending diagonal. And according to what we are seeing here, we get to see that more detail on the weekly frames. We're going to be attacking level 1. Inside of this ending diagonal, we should be attacking level 1. Let's take a look at where that level 1 is on the daily charts. All right, so I'm looking at attack on that level 1. This is, of course, 128.44. We definitely have to take out 128.44, showing you as a resistance. Above that 128.44, we'd have to source this on we have that level 1 here. More clearly, we are looking at 129.75, I believe. Over here, it even shows 130. you get to 130. But we have 129.05 at that level. I'm looking at that red arrow, which is internal or higher degree level 1. There's another high degree level 1 up here, but we'll just focus on that first level 1. We're looking really at 129.50. We are looking at 130. We're doing this move. That is the same C that we get to see on our daily charts. We know we have an A, B, and a C. What we're doing is really a wave 5, just to break out of the market head. This market head is 128.80, showing of course again at 129. Just to break out of that market head or to test the market head takes you to 129.50 and 130 in reality. All right, so let's take a look at the target objectives. So the head is showing 130 here, even 130 plus. The internal head here is level B, is really even something like 129, I believe 129.50. I believe this used to be 128.80. I'm sorry, 128.80. This level is 128.80. Level B is 128.80. All right. Let's take it to the current trade swing projections. We would want to long market at current levels. We would want to take a long trigger at around, if you're going to be short-term trading it, we take a long trigger from current levels, 126.80, I believe, 126.83, to target 127.40. Above 127.40 during the same week, we're going to be getting 127.80 and 128. Of course, because of the coming elections or the current election results on Thursday, above 128 takes us to 129.50. We'll go straight for 129.50. Focus on 129.50. There are no more shoulder levels, we believe. Over here on the 12 chart, we're showing that we get to 128.50, maybe 129 and 129.50, then fall back into another shoulder. Is this possible? I doubt, but it is possible that we fall into a higher shoulder, maybe 127, not that low again, not 125, not 126.80s, maybe 126.80s, 127. So after doing 129.50, you can fall back. We do another shoulder to the left before the market rejects and moves higher. After all, we're moving inside of an ending diagonal. And once we break level 5, you can see we have a 1 and a 2, 3 wide brackets, 4 and 5. After doing level 5, we've done a correction. We break level 5. It's still correct because it comes an internal 1 and a 2 and a 3. So we still get a shoulder, but much retracted to the upside or much hawkish bullish shoulder than the previous one, which bounced at 126.10. The next one probably bounces at 127. All right, let's move on. So the market is long for sterling dollar. We are going to protect our longs at 126.20 using hedge for the whole size. We can also consider to increase size because this is a fundamentally driven trade by the UK elections that will take place next Thursday, and of course the results are going to begin to get released on Friday and across the end of the week. The market is already discounting change of government and change of physical policy or economic policy. A physical policy is one issued by the central bank. So we're looking here at economic policy to shift away from current Brexit problems that are restraining the UK economy.